Welcome back, everyone. This is part 2 of the business credit score series. So we're going to get into the nitty gritty. Make sure you have subscribed to the channel. Give me a huge thumbs up and make sure to check out all of the links in the description. I've left some additional playlists for you, some business credit playlists, how to join the credit community. If you want to learn how to start a credit repair business, a credit business, business credit, personal credit, you name it, we cover it. Turo rental car business, we've already done that. So we are covering so much inside of the community, and all of the previous calls are recorded inside of our course, not to mention you'll have access to all of our courses. So if you are interested, check out the link below. It is a super sweet deal right now, but let's get straight to it. My name is Credit Coach Nicole Scott. We're going to be covering how to build your business credit, because a lot of people waste their time, their money. They pay people to build business credit for them, which is the biggest hoax ever. Let me just tell you that, because you are going to need to show your ability as a business to repay back debt as agreed. That's the number one thing. That's what everyone wants to see. And that's important on the personal and the business side. We don't want to have any late payments. We don't want to show that we are facing any sort of signs of financial risk or anything of that nature. Whenever you make a late payment, whether that's on the personal side or the business side, there's going to be all sorts of red flags being thrown. And believe me when I tell you, it's one of the most damaging things that you can do to both personal and business credit. I literally see it happen all the time with people where they will pay something late on their personal credit and their credit score will drop over 100 points. Oh, RIP. It just happened to one of my clients. He made a car payment late. Okay, so back to the story at hand. Same thing can happen on the business side. It can be the most damaging, and there is no cushion on the business side. 30 days is what we have on the personal side before we actually get that slap on the wrist saying we were 30 days late. There is no cushion on the business side. There is no, oh, you're 30 days late, no problem. No, if you are 1 day past the term, you pay beyond the terms. If you are 5 days past the terms, you pay beyond the terms. So you don't ever want to be reported as paying beyond the terms. You want to be reported as paying as agreed or paying before the terms. You don't want to pay too early, but you also want to make sure you're right on time or a bit early, right? In the first video, we talked about comparable credit and how important it is for you to add the type of comparable credit that your business needs, whether those are vendor accounts or supplier accounts. Now, the easiest ones to get to off the bat, no matter if you're a new business, established business, or just building business credit, are your vendor accounts, right? You can get different vendor accounts that are going to help you establish your business credit profiles. And again, the data that you give these, suppliers or vendors, that is the data that is going to end up on your business credit reports. Now, chances are Dun & Bradstreet will probably have some data on file for you if you are an older business. If you're a brand new business, they may or may not. How do we get our business profiles established, essentially? Well, with the most of the bureaus, it's because you have a financial trade line, a business trade line, whether that's financial or vendor, that reports, and that will establish your profile. Now with Dun & Bradstreet, you can actually sign up for a free account and you can manage your account to ensure that your name, your address, your phone number, your website, all of your business data is up to date and accurate, along with your NAICS code, which is basically one code that you will elect to basically classify the type of business that you operate. And please stay away from high risk, please. Inside of the credit community, we did a whole session on high risk NAICS codes and which ones you should use and shouldn't use, so on and so forth. So please, if you are interested in learning more, the credit community is on a super sweet low rate right now, which is very limited, guys. So when we hit the next 10 people that join, we're cutting this deal off, okay? So please take advantage of it now, because it's less than a cup of coffee a day to join something that can be life-changing for you. Business credit changed my life, okay? Everything that I learned, that I'm teaching you guys, has changed my life, okay? You have no idea how much I was struggling before I learned all of this information. This is absolutely the most powerful information that I have ever learned. And I have been to college, okay? I am a college graduate. And this information is not given to you in school, unfortunately. But yet it's the most powerful, life-changing information I have ever learned. And I didn't learn it until I was 35 or so. So don't feel like it's too early or too late, because it never is. So let's get started, guys. I know I tend to get off subject, but I work with a lot of people that feel guilty about it. And how can we feel guilty when this is something that's not taught to us? I talked about Credit Strong in other videos, but I want to just reiterate how much Credit Strong can really benefit your business credit, because you can add a Credit Strong financial services business trade line to your business credit, anywhere from $5,000 all the way up to $50,000. Okay, the 50K, basically you'd be paying $999, so $1,000 for a $50,000 trade line. If I sell you a $50,000 trade line right now, that's an AU on the personal side, that's not even a primary trade line. Now, yeah, it comes with history and stuff like that, but it would probably be somewhere around that range, right? So with the business side, think of it as you are paying for a trade line. You still have to make your monthly payments, but that's a savings account. You can cancel anytime and you get all that money back. You're not charged an interest for any of the payments that you make. There's only a one-time fee, so it's basically like you are paying them for a trade line. This is going to help you get that comparable credit on your business bureaus, because they credit strong on the business side. No one can see who the bank is. It just says financial services. If you buy our business trade lines, we sell business trade lines. We also can add trade lines to your business credit report. But again, they are a little bit of an investment, right? If you are interested in getting business credit trade lines, visit the link below and we can book a call and go over it, or you can just purchase them if you don't need to speak with me. But ours report to Experian and SBFE. Credit Strong's business trade lines, they report to Experian, Equifax, PayNet, and SBFE. Okay, so that is a powerful trade line, way better than any Net 30 account or Net Vendor account that you can get, because this is adding real comparable credit to your profile. So if you want to go buy an auto in your business name and you don't have any other financial services business trade lines on your credit report, do you honestly think that you're going to be able to get an auto in just your business name? No, hell no. You don't have no comparable credit. That bank's not going to be the first one to take a risk on you. Heck no. Plus your interest rate's going to be sky high. So the Credit Strong is a great option. It is an installment loan, but again, you can cancel it at any time and watch that video. I've left the link below. So let's get into the nitty gritty, because this is what everybody wants to know. Because if you are building business credit, you need to be telling everyone about this information, okay? If you want to start offering credit as a service, you need to learn this information, okay? So business credit bureaus and business credit scores on the business side are very different than the personal side. On the personal side, we all know what our credit scores mean, no matter who the bureau is, whether it's Equifax, TransUnion, or Experian. We know if we have a 720 credit score, we're good, right? But with the business side, they all vary and they are all great for different reasons and purposes. So that is a prime example of how you have to be really savvy. And when I tell you, I was really, I guess, misunderstood with all the information that I, kind of come across online when I was first learning. So I was really invested with Dun & Bradstreet for a long time. But you have to understand, again, what are your goals? If your goals are not vendor or supplier accounts or buying a vehicle, then Dun& Bradstreet is not who you want to focus on, okay? Well, there are three major consumer credit bureaus. We talked about this briefly. There's several business credit bureaus, and we're going to be going over who they are. We'll start with PayNet, and a lot of you may have never heard of PayNet, but PayNet is actually a division of Equifax. Yes, Equifax, as in Equifax Personal Credit. Equifax is one of the largest players in this game. Mind you, they are basically the division that controls PayNet now. They were purchased by them in 2019. And now there's Equifax Business, and then there's also PayNet. So just know, if they all are operated by Equifax, they're all sharing data, right? Equifax holds our personal data, Equifax holds our business data. Same thing with Experian as well. So the downside about PayNet is not a lot of lending institutions are going to use them as a primary credit bureau. So they are one of the leading financial trade lines focused credit bureaus. PayNet is a financial services trade line focused credit bureau. And the primary score that you're going to see from PayNet is going to be your PayNet Master Score. The PayNet Master Score is calculated using the largest database of business loan and term leases in the nation. PayNet Master Scores are going to range from 500 all the way up to 800. And of course, just like with personal credit, the higher your score is, the better a company's credit rating is. And like I mentioned before, if your company data does not have anything, if it just says null, that means that there is no data. Your company does not have any credit history, nor do they have a file. So that's why it's really important to build credit with financial institutions that we're going to report your financial services trade line to as many credit reporting agencies as possible. Now, here's an example of how the PayNet scores are kind of broken down, because these are the, again, most common, which is the PayNet Master Score version 2, and it's presented below. So the score range 700 to 800, similar to personal credit. That means that you have a really good rating with them, and that your likelihood of defaulting on any contract or payment terms is super low, okay? That means that if you have low score, 500 to 589, just like with personal credit, you have a very high likelihood that you are going to default on a, credit contract or some sort of contractual agreement between you and the supplier. So, or the, creditor, chances are they're probably going to deny you. So that's why it's so important for you to make sure that you pay all of these accounts on time, because you never know when changes are going to happen and if these certain business trade lines that you do have are going to start reporting to the bureaus or not, because things are always changing, okay? And all of this data is shared. Okay, so it's important that you do the right thing on the personal side and the business side, or else this stuff is really going to damage you. We have to do right. If you're going to be taking out credit, it's extremely important that you keep your word and pay as agreed by the due date. Okay, plan accordingly. You have to be responsible when it comes to credit. Don't take on more than you can handle. And that's why it's so important for us to look at the bigger picture. For example, I help a lot of people get funding. I can help a lot of people get large amounts of funding, but I don't always want to, because as a coach, I don't want to have my clients take on more credit than they can financially afford. If they don't have a W-2 job where they're bringing in, constant income, chances are we don't want to take a personal loan out, because if something happens, it's not going to be a good thing, right? So we really want to be careful. And it's very easy to get $50,000, $30,000 loan, especially on the business side or even on the, personal side. So you don't want to take that on if you're going to have a payment every month of $1,500, $2,000, whatever the case may be, because that's going to be for, I don't know how long your term is, 60 months, let's say. So are you going to be able to financially keep up with an extra $2,000 payment every month for the next 5 years? Well, you got to ask yourself, what's it going to cost me? At the end of the day, a lot of times it's better just to go a little bit slower and not take on that debt, but work smarter, not harder, because we don't want to dig ourselves into a hole before we've even finished up a couple laps. Everyone tries to fast track the process. I got to get there fast as I can. I got to get there fast as I can. Don't worry about fast. Worry about being consistent. Worry about, staying in the race. Okay. The faster you go, the more likely you are to crash and burn out. Okay. What happens when you crash and burn out and you have all of this debt that you have acquired that you now have an obligation to pay back? So you have to understand, we want to be in this race for the long haul. This is a marathon. This is not a sprint. So we're not up against any time. We're not racing. I understand we all have goals and we have a time frame that we want to achieve those goals. But just please trust me when I tell you, don't be in a rush. Okay. If you are a business owner, you need to have a 5-year plan. Okay. 1 year, 2 years, 3 years, 4 years, 5 years. Have your quarterly goals written out and make them achievable so you feel like you are getting stuff done. Okay? That's all I'm going to say about that. But make sure you have subscribed and leave me a comment below if you have learned anything from these videos. I appreciate you guys watching so much, and make sure that you have shared them with a friend. I do have credit merch out, so if you want to purchase a credit shirt, credit merch, credit score shirt, credit repair shirt, purchase below with the links. I've also left it in the comments for you to get your shirts to represent. Here we go with Equifax. And no, this is not Equifax personal. Well, it is, but it isn't, right? Equifax is such a large and powerful company. They not only own the personal side, but they also own the business side and PayNet, right? So when I tell you it is important for you to be educated about this stuff, it is so important, right? And it is important if you have taken out any sort of debt or loan with the government that you stay in good standing with that, because if you don't, we've got some trouble ahead, my friends, and we don't want that. Now, in addition to being one of the largest consumer credit reporting agencies, Equifax is also one of the largest business credit reporting agencies. So they are very powerful and they offer multiple business credit scores. And the second type of business credit score that we have with Equifax is going to be the Equifax Business Delinquency Financial Score on your financial accounts. And that is going to basically determine the likelihood of severe delinquency with financial accounts, financial business trade lines. So Equifax business credit scores include both company principal and company credit information. So you'll notice that trend with Experian as well. And I can tell you from just personal experience, if they hold data about us, period, it's going to be on anything that's attached to us. Anything on the personal side or in the business side, if it is attached to us, they are going to have it in that data. We might not see it as consumers or as business owners, but others will. So it's very important for us to just make sure that we are doing the right thing on both sides of the fence. And if you have taken out any funding from the government, like an SBA loan or anything that needs to be repaid back, that is not, you need to get into good standing and make sure that is paid back, because you will not be able to get any sort of SBA funding until that is corrected. And it doesn't matter if it was for a business 10 years ago or whatever. If your social security number is attached to any sort of derogatory or delinquent account that the government has backed, you are going to need to clear that debt up first before you qualify for any additional SBA funding. And I actually had this happen to someone. They're like, oh my God, that was like so long ago. I didn't realize it. It was like $20,000. I totally forgot that business went out of business. Well, it doesn't matter because you personally guaranteed it. And even though that business went out of business, you are still obligated to repay back that debt. So a lot of times when it's from, several years ago, you can try to make some sort of negotiations to get it paid and settled. But again, we're dealing with the government here, and they sometimes don't like to give us a great deal. So just do what you can. Now, if you do go with Credit Strong, and again, I did leave a link below. If you decide to sign up with Credit Strong, I'm actually affiliated with them, meaning if you sign up, you will support our channel at no additional cost to you. So if you found value in this video, all that I ask is that you give us a thumbs up, leave us a comment, and of course, leave or use all of our affiliate links in the description, because that very small fee that they give us helps go to support our channel. But with Credit Strong, you will actually receive the Equifax Business Delinquency Financial Grade for free, so you can track your progress in building business credit for your company. And I also recommend that you get NAV and NAV Prime. NAV is great because it's also a trade line that is going to report, and it is going to help establish all of your business credit profiles as well. So recommend NAV. I'll leave a link below for that. And NAV is also one of those companies that's gone through a lot of good changes lately, just like Credit Strong. They, are always a good option, but I feel like they're just enhancing their trade line experience for the business owners, so that way they can really leverage those for what we have to pay. Because, in this game of credit, you have to pay to play. That's just how it is. If you want real money and real funding, you need to really invest in your credit. And that's on the personal side and on the business side. And if you feel like I'm not sure where I should invest and I need help and I need guidance, book a call with me. I have a link below. You can literally book a 15-minute call with me, 30-minute call, or if you need a whole hour coaching call, you can do what's best for you. If you want to just run some things by me, that's great. I have clients that book calls with me every month just to kind of review things, and it only takes 30 minutes. So I'm here for you, and I can kind of give you some feedback as far as what I would do if I were you and I were you in your shoes. Or I can share some experiences that I have gone through or that some of my clients have gone through. I do not give legal advice, and I do not give any tax advice, and I give informational purposes only. But I can share experience with you. I can share what I would do if I were in your shoes. And that's worth way more than anything else in this world, if you ask me. Because if I would have had someone keep it real with me and share exactly what their experience versus, some bull crap, I would be so much further in life, I feel like. But in this field, a lot of people try to sell you a honk a honk. You know what I mean? The business delinquency financial score is pretty easy. It starts from 101 and it goes all the way up to 650. So obviously the higher the better. If you are anywhere from like a 585 to a 650, that means you are a very low risk. So your risk class is a 1, meaning the likelihood of you defaulting is very low because you have shown positive payment history and prior examples of making sure that all of your bills were paid on time, which which is extremely important. So again, set everything up on auto pay. You must make sure that you are organized with your business. Get QuickBooks. Make sure that you have some sort of system to keep you together. Most business owners do use QuickBooks, and they are a great platform to be able to integrate, your credit cards and all that stuff to categorize it and make sure you stay on track, okay? Now, with the business delinquency financial scores, you definitely want to make sure that if you have something negative, you take a look at what that is and try to get that off by disputing it with Equifax. I just had this issue with another client that I was working with, and they actually did not even know where this information came from, but their score was very, very low and they were listed as high risk. So that's really bad, because if you're listed as high risk, think of it like this: any bank that pulls Equifax business is going to deny you. So prime example of a bank that uses Equifax business is Truist. Truist uses Equifax on the personal side, and they use Equifax on the business side. Now, on the business side, they're actually going to pull both. They're going to look at your Equifax personal credit. They're going to look at your Equifax business credit. Now, if you have a good, solid Equifax business credit, that's why I say that $50,000 trade line from Credit Strong is totally worth it, because you can use that as comparable credit with like Truist and go get $50,000 with them. Stop playing. They have credit cards, they have lines of credit, they have auto loans, they have... Stop it. Okay, we're going to wrap up for this part, but come back for part 3, where we're going to be covering Dun and Bradstreet. We're going to be talking about your PayNet score, guys. I'm so excited to be able to share this information with you. So stick around, share it with a friend, make sure you smash that like button and subscribe, and I'll see you next time. Take care.